Prosper loans provide a streamlined approach for anyone who wants financial flexibility, especially when it comes to debt consolidation, home projects, or handling unexpected bills. The platform has been around since 2005 and stands out as the first peer-to-peer lending option in the US, meaning the money you borrow doesn't just come from a bank, but also from individual investors who want to help people like you achieve their goals. Borrowers can request from $2,000 up to $50,000, with funds showing up as quickly as a single business day after approval, making it one of the faster options for personal loans out there. Flexibility is a clear benefit with Prosper. Borrowers can choose loan terms between 2 and 5 years, which offers a lot of freedom to prioritize either lower payments over more time or getting debt settled faster. There's also no penalty for paying off early, which is huge if you get a bonus or just want to be debt-free quicker. The rates for Prosper loans range from 8.99% up to a pretty steep 35.99%, reflecting a broad range of personal financial situations. The average APR for a 3-year loan in early 2024 hovered at 24.79%. So while there are cases where rates are lower, most people will fall somewhere around that mark. The origination fee, which comes right off the top, can run from 1% up to 9.99%. To put that in perspective, a $10,000 loan at a 9.99% origination fee means only $9,001 lands in your account. Eligibility is straightforward but strict. A minimum credit score of 640 is required, so this isn't really a solution for those with deeply damaged credit. However, for qualified borrowers, Prosper does make room to add a co-applicant, which can boost approval odds and maybe lock in a lower rate if that second applicant has stronger credit. There are clear purposes outlined for these loans: consolidating debt, home improvements, covering healthcare expenses, cars, vacations, and even day-to-day household costs. But whatever the reason, the application process remains easy and quick. That said, there are some catches you don't want to overlook. Along with that origination fee, there are additional charges like late fees, check payment fees, and insufficient funds fees if a payment doesn't go through. These can chip away at the advantages if budgeting gets tight. Also, because these are personal loans, the interest isn't tax deductible for most users unless the money is spent on business, qualifying education, or certain taxable investments. And while getting a quote won't affect your credit, actually taking the loan will have an impact, as with any major financial commitment. In summary, Prosper loans offer a quick and user-friendly way to unlock funds for all kinds of life's needs, with a unique platform focused on connecting real people. The big draws are the ease of application, flexibility in choosing repayment, and the lack of prepayment penalties, but there's no avoiding the fact that the rates and fees can add up, especially for those who don't have top-tier credit. Anyone thinking about Prosper should look closely at the total cost, commit to responsible repayment, and remember that, like with any loan, missing payments or taking on too much can create more challenges in the long run.